All right. Good morning, everybody. Welcome to the July 7th edition of the Premarket Prep session. I'm your host, Adam Holland, stock options expert and expert market strategist. And we're here amidst, what will hopefully be the last time under the gaze of the blazing sun to discuss what we have going on for markets in terms of news. Going to be here for probably the first hour of market and then hitting the road for a wedding. That's what I'm dressed for now. It's outside. It's hot. Not going to be in a dress shirt. Going to be in this, nice upscale mock neck t-shirt with the, sport coat thrown on top of it. And we are calling it a day. It's an outside wedding. It is supposed to be 90 something degrees. You will not catch this king out there sweating his butt off in a dress shirt. So happy to be here, and that's why I'm looking a little bit different, but this is how I'm going to be looking. Cool breeze, standing out there, watching my uncle marry his betrothed and, take this amazing next step in life. So going to miss the Matrix vibes. I love it. I appreciate it. Yeah, who knows? Maybe the sunglasses will come back out on occasion. But I'm going to be very, very happy to get the curtains up and get the setup going. Curtains are here. Curtain rods are here. Everything is here. It just needs to be put up. I'm not a handy person. You guys know that. So that means somebody's coming here to put these up for me. And then once those are up, we're good. You can't see them, but I have my normal lights set up going like around the door and stuff. But I'm also waiting for lights to go and fill up that huge wall. So I'm excited for what I got coming in. It's going to be worth the wait. Very, very cool. It's going to be super vibey, and I get to trick out my little trading dungeon that I've got going on here. But good morning, everybody. Hope you had an amazing, restful, restorative night, right? And a great morning. You're ready to hit the ground running here this morning. I'm going to go ahead and dive in because, again, like I said, on a time crunch. So our top news, making sense of it all. All eyes will be on the Labor Department's non-farm payrolls report this morning as the Labor Department publishes the figure at 8:30 a.m. Eastern Standard Time. Economists expect the U.S. economy to have added 225,000 jobs in June, down from the surprise 339,000 increase in May, which represented the second strongest month for job creation so far this year. Note that the monthly figure has beaten every estimate over the past year except for one, while the current projection would trail the 6-month average of 314,000, highlighting just how hot the labor market has been. Now, Fed is watching. Jerome Powell has explained that the central bank's inflation fight had yet to be resolved as this economy is very strong and what's driving it is a very strong labor market. That's a direct quote. As such, it will take, quote, some softening of the labor market for inflation to come down closer to the Fed's 2% inflation goal. Aside from the lingering labor shortage, the Fed will also keep an eye on wage growth. Average hourly earnings are expected to rise 0.3% month over month in June, unchanged from the prior month, though it should tick down to 4.2% from 4.3% on a year-over-year basis. Despite the Fed's resolve to squash inflation, having jacked up its benchmark rate to a target range of 5 to 5.25% from near zero over a year ago, a slew of data this week has pointed to a tight labor market. Thursday's ADP's measure of private hiring smashed expectations, and the Challenger job cuts report signaled a sizable drop in cuts, which sent Treasury yields soaring. Conversely, the JOLTS report showed a fall in job openings, while the quits rate ticked up to 2.6% and the number of Americans filing for initial jobless claims rose over the past week. Now, seeking alpha commentary, a lower than expected NFP reading could drive a substantial rally that leads to new local highs, said seeking alpha analyst Christopher Robb. But for there to be a major sell-off, I think what would be needed would be a miss that is way outside of expected numbers, like that which occurred in the ADP report. Eric Basmajian, investing group leader of EPB Macro Research, also notes that the investors should divide the labor market into three segments: cyclical economy, total economy, and non-cyclical economy. If we see more weakness in the cyclical employment baskets, we know with a higher level of confidence that recessionary conditions are biting and there is a grave business cycle risk imminently ahead. However, if the cycle employment sectors do not show an increasing pace of deterioration, then that could certainly prolong the onset of the recession. So We had a kind of chock full week of data when we talk about economic data here for the end of the week, and this is really what we're finishing up with here this week, which is the non-farm payrolls. Let me see here, non-farm payrolls that we got going on. So let's hop and see what we have going on. Do we have NFP data here? Non-farm payroll data. I'm not seeing it. We got maybe our boy. Oh no, Walter looks like he's on here as of 6 a.m. but nothing since like 8 a.m. 8:30. Let's go ahead and check out what markets got going on for us. Again, this is something where we haven't missed non-farm payrolls literally in the last like year, except for once. So I don't anticipating us missing this time. Um, Last time I looked at markets, let's see, we got Thinkorswim loading, and that can kind of help paint the picture for us. Because overall, outside of certain like economic reports, it's not even like most of these reports are kind of automatically indicative of a certain result, right? Unless you are somebody who's used to reading these reports, it's not like any of them scream, okay, this was the result or that was the result. So NFP, let's see, we don't have these coming up yet, but I got Thinkorswim loading in the background. I'll wait for that to come up and we can kind of examine really what the response is, which is the most important. But we had, on Thursday, the ADP measure of private hiring that smashed expectations. Overall, I feel like job market's still looking strong. So it's one of those things where that's probably why the Fed is still so adamant about continuing to hike. Like it's just that until they see any type of softening of the labor market, which we haven't, they're going to keep hiking and doing what they need to do. So the economy is strong, and that's what's driving the strong labor market, and that's what's going to cause them to continue to hike. So I feel like if we saw some softening, then they might stop, but we're really not seeing any softening. Okay, there we go. Thank you, Detrice. 209K versus 240K estimated. So yeah, I feel like, let's see, expect the economy to have added 225 jobs in June. So it looks like the expectation was, you said here 240 estimated. This report is saying 225 were estimated to have been added. It looks like 209K is what was actually added. So that sounds like it's going to end up being bullish, right? Because that's what we want to see is like less jobs than expected being added, softening in the labor market. And if we go ahead, now that Thinkorswim is up here, we did get some volatility off the news. We got a push higher for 10 minutes, then we got a drop lower for 10 minutes, and now we're back to break even. So we did want to miss on this number in order to be bullish. I don't know if this is if this is like, a large enough gap, but I'd say it's pretty substantial, right? Overall, it looks like we were expecting somewhere between 225K and 240K. When we got 209, so that could end up, causing a substantial rally, according to, this analyst. But overall, seeing anything in terms of like lighter or softer job market is bullish. If you see anything in terms of like a stronger labor market, where, we have less people unemployed and then that is bearish, because that means the Fed can just continue to hike, continue to hike, continue to hike. So overall, looks like bullish sentiment injected into the market here before open. That doesn't necessarily mean that the direct reaction is bullish. It looks like right now it's mixed. But if you guys remember from Q&A last night, coming into today with a nice bull flag that maintained overnight. So we'll see if we can go and push and potentially fire that bull flag here. Could make for a really nice scalping day on this fine Friday. Haven't figured out yet if I'm going to be bad and try and scalp during this wedding. We'll see. Might be too juicy to miss out on. I don't know. We'll see. If anything, it'll be size small, though. Again, holiday week. You want to make sure that you're sized correctly for the holiday week. That you're not going, crazy with your position sizing. Again, typically low volume, but Friday has really been the day over the course of the past few weeks where it's time to secure that bag. Thursday and Friday, we typically get the biggest moves. Again, that does not mean that you kind of skew your trading plan. Just understand that, take that into account. But like Meta paid us a big bag, what was the last Friday, 2 Fridays ago. Those zero dates can really, really, really go crazy on Friday, especially if we come in with some solid setups like we are this morning. So that's something to keep an eye on. In terms of tech here, speaking of Meta, cage fight, Twitter is threatening Meta with legal action over its Instagram Threads launch as Elon Musk tries to take off his gloves following a sparring match with Mark Zuckerberg. Twitter lawyer Alex Spiro has accused Meta of poaching former Twitter employees with access to trade secrets to build the competitor app, which has garnered 30 million downloads in 24 hours. Many analysts have lauded Threads, with some projecting a long-term sales boost for Meta, while investing group leader Daniel Jones acknowledged some risks associated with the launch, but believes the good outweighs the bad. I feel like it's been a surprisingly positive reception for Threads. Everybody is kind of excited about it. I still have not posted my first thread. I'm on Threads. We talked about it last night during the Q&A. I don't know if you guys are on. Throw a 3 in the chat if you've downloaded it since we've last talked. Again, it seems like something that, kind of it's continuously growing. And one of the reasons why is because of the easy transference of data, right? You can literally go and take your Instagram account and then transfer it directly over into a Threads account. And it makes it really easy. And that's really why we have so many downloads, just because it's such a low barrier to entry. But people were kind of on there fooling around. I saw someone likened it to it being like a group text back in high school that you were like invited to. They were like, hey, the early days of Threads are like you being in a group text in high school that not everyone is in on. I feel like that was a good comparison. So we'll see if, it keeps up and the good vibes stay there. Definitely hats off to the Meta team, the back end team, for being able to handle 30 million downloads without crashing and really without any major issues. That is huge, right? So I feel like that cannot go, unapplauded. That is wild for them to be able to handle 30 million downloads in such an influx and activity of users and it not glitch or anything like that. So good signs right now all around for Meta. Zuck is flying high. The lizard person, Mark Zuckerberg, he's flying close to the sun. We'll see if it ends up like Icarus and the wax melts and he falls back down to earth. But until then, we got to clap it up, right, and give him his flowers because, he stole another idea, but he's making it work. He's making it shake, and people are liking it. So, the world is kind of really built off of stolen ideas, whether it's Alexander Graham Bell and the telephone and anything far and few between. So, don't knock the player. Don't hate the player, hate the game. That's pretty much how you're looking at it. Let's see what we got next, though, going on. And in terms of the cage fight, I don't know if they'll actually get into like a fight together, like a cage match. I feel like it ends up being more of a stunt, right? Kind of the same thing with Twitter suing Meta. I don't think anything will actually come of it, but I think it's just kind of to inject Twitter back into the news cycle. But one thing that we were seeing a lot of eyes going from other platforms and going to Threads. So who knows? Might be a nice little source of income for Meta, which is really what they were looking for. And it's funny because they got one of their biggest ideas for more income, just taking it from Musk again. So I feel like Zuckerberg saw Musk enter the space and was just like, I'm just going to copy whatever this guy does. And that has just been the MO. They started charging for verification after they swore for forever they wouldn't do it. And it didn't make sense and da-da-da. Twitter did it. It paid them. Instagram did it. Now they're getting paid, right? So he's pretty much like that's the game plan, right? Follow whatever Musk is doing. This dude seems to be pretty darn successful with whatever he does. So let's go ahead and use our advantages to our advantage, and just take the little bits that he does right. Now, in terms of guidance here, Chip Glut, while the recent AI frenzy is expected to boost memory chip sales, the time hasn't come yet. Samsung Electronics, the world's largest memory chip maker, expects second quarter operating profit to plunge around 96% year over year. Wow, what? 96% decrease in profit as the memory chip downturn continues amid persistent oversupply. The downbeat outlook comes despite Samsung cutting its memory chip production following a global demand slowdown that weighs on prices. The production cut will likely take place in the third quarter, which could prop up prices, according to Daiwa Capital's SK Chem. Sheesh. Well, I mean, that's nothing that we can trade here, Samsung Electronics, but that is just crazy. A 96% year over year operating profit plunge. What? And I guess it's one of those things that makes you second guess, right? It just makes you kind of sober up when it comes to the whole AI frenzy. A lot of people have called it an AI bubble. There are things that are facing the semiconductor space, right? Headwinds that are facing the semiconductor space, and this chip glut is one of them. So we'll really know based off of whether or not Nvidia's their projection for their crazy year over year revenue increase. If that comes to pass, then we'll know, okay, this is the truth, this is the real deal, or this was just completely overblown, right? Time will tell. It is the true equalizer, so we'll see. Can all these companies figure out some way to really, 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 create value add with AI and that drive, the support of the expectations everyone has? Because right now the expectations are sky freaking high. And, if we don't meet them, these chip companies could be looking at some trouble. So, I'm still behind them, still a big believer in them, but it's just one of those things where it's like, that's like, like Victor Wembanyama, if you guys watch basketball at all. He's like the 7'4", 7'7", first pick in the NBA draft. He's literally supposed to be like the second coming of literally any great basketball player. Like they're comparing him to LeBron, all that stuff. When you're getting compared to LeBron out the gate, if you're not LeBron, you're a failure essentially. And that's really where we're kind of putting ourselves with this AI hype is like, if we don't, Daniel said the blue check looks good on Threads. It does look good on Threads, my man. But it's one of those things where it's like, if we don't live up to that hype, it can really be seen as just a huge, huge, huge failure. So, that's something that we got to pay attention to. We got to be on top of, and we'll see how it shakes out. We'll see how it shakes out here for the semiconductors. In terms of the defense news, show of force, and an announcement expected to come later today, the U.S. will outline the supply of cluster bombs in a new Ukrainian military aid package worth up to $800 million. U.S. defense companies have moved away from the controversial munitions, which can cause civilian casualties long after a conflict comes to an end, with Textron, ticker TXT, the last U.S. manufacturer of cluster bombs, ending production in 2016. Wow. Dang. Cluster bombs would upgrade Kiev's firepower as it gets a long-planned counteroffensive underway and would add to the supply of more advanced weapons like M1 Abrams tanks and heavy artillery. All this does is further underscore how we're in a long-term, kind of conflict that's occurring, and that's just confirmation of what we've been talking about ever since this whole conflict rang out, right? I still remember it like it was yesterday. I'm on the train in New York City, not trading that morning. I hop off the train. Bunch of positions are in the red. I'm like, what the heck happens? I check the news on my phone, and Russia has invaded Ukraine, right? Very annoying, unfortunate black swan event. Those happen. I feel like they love happening while I'm traveling. But, ever since then, it was kind of like people thought this would be a quick type of thing, and it was the exact opposite. All of, when you looked beneath the surface, all of the posturing that was occurring was that of a long-term conflict, and that's exactly what ended up playing out here, and is still playing out. So there was reports that like Russia doesn't really have any major offensive capabilities anymore, and we'll see if that ends up still being the case. I feel like there haven't really been any type of like kind of trade centered around this anymore. Again, the market and really big moves in equities and in stocks is based off of a mismatch in expectations. Now the expectation is just this war continuing. So that's just kind of an update, and making sure that we understand that this is something that sadly doesn't look to be going away anytime soon. Now, in terms of today's markets, in Asia, Japan, we're down 1.2%. Hong Kong, we're down 0.9%. China down 0.3%. India down 0.8%. The footy in London at midday down 0.3%. Paris up 0.5%. Frankfurt up 0.5%. Dow flat. S&P down 0.1%. NASDAQ down 0.1%. Crude oil up 0.5%. Gold up 0.4%. Bitcoin back down at 30K, 174, down 3.3%. Today's economic calendar, we had NFP, non-farm payrolls, that was really the biggest thing in terms of data and anything that leaked. Let's see how we're moving since non-farm payrolls. Looks like overall, right, we jerked up for a bit and then came down, and overall we're net lower. So we will open red. Looks like slightly red, still probably 0.2, right? S&P down 0.2%. Doesn't look like anything crazy. We're really testing the pre-market low, the previous pre-market low currently. So you guys know what that means. Something that we'll definitely be looking out for here. That certain strategy involving the pre-market low. So right now we're seeing some, kind of bottoming candles come in at that level. So we'll examine, of course, more in depth in the pre-market analysis that I tossed in the Facebook group. But right now, we're at one of those spots where we did bounce and we finally got some volume of note yesterday. We had, extremely low volume the first 2 days of the week, which is very characteristic of a holiday week. That's how holiday weeks go. No big money, no institutional money is trading. So you have a bunch of the little guys, screwing around in the playground. And as a result, you get a lot of craziness, sand being thrown, gum in people's hair. It's how the market was Monday, Wednesday, right? Low volume, extremely low volume on Monday, the lowest we've seen in months. Extremely low volume. And yesterday we finally got close, or we finally got average volume, right? It was one of the first days that we got average volume. We got real volume, and it was buyers pushing us up, right? Pushing us up from this potential bounce area. So we're definitely still within the realm of a daily double top. We won't know until we lose 431.19 on the daily. But right now we've got, gaps up, we got gaps down to fill those gaps. And we're currently, potentially bull flagging heading into open, but we got to see. This could be just, it's a brief respite and part of a larger bear flag when we take this next leg down. So we lose 437.06 on the hourly, then we're likely headed lower. Puts look like a great move if we get above 440.1 on the hourly. When we hold there, then we could head higher, and intraday calls are looking like the move. But that's really kind of the overall quick analysis that we got going on here. And let me finish up with our rapid fire bullet point rundown. So in terms of that bullet point rundown, Biogen, ticker BIIB, in Eisai, I do not know how to pronounce that. It's spelled EISAI. When full FDA nod for Alzheimer's drug, I'm sure BIIB will be flying this morning. Tesla reportedly sacked some battery workers at Shanghai factory. Sacks just means fires. Just in case anybody didn't know, don't mean to mansplain, but some people aren't hip to all the different vernacular. Amazon, ticker AMZN CEO, confident on delivery upside ahead of Prime Day. We got Prime Day coming up for Amazon. Levi Strauss, ticker LEVI, slides on dimmed outlook as U.S. shoppers spend less. GTCR to buy majority stake in Fidelity National Information's, whose ticker is FIS, WorldPlay. Online food delivery apps battle New York City over minimum wage law. JetBlue, ticker JBLU, hits some turbulence after ending American Airlines alliance. AbbVie, ticker ABBV, updates full-year earnings forecast below consensus. And then Shell, ticker SHEL, CEO says cutting oil production now would be dangerous. Google, ticker GOOG and GOOGL, delays first customized smartphone chip till 2025. So that will wrap us up, put a bow on it, and take us out for the pre-market prep session on, July 7th, 2023. Happy Friday, everybody. Make sure to remain patient. Don't force anything today. We've gotten great moves on Friday that have allowed for great monetary opportunity, right? But that doesn't mean that you try and manufacture those. You wait and take advantage of what is there. Be patient, right? The market is like, I don't even know. The market is the person that's handing out the opportunity. You wait and see what it can give you. You don't demand opportunity out of the market, because that's a good way to get stomped out, right? So let's see. We've got potential for bull flag, potential for larger bear flag. What tells us is what we end up getting. So again, those levels are super important. It's going to be that 437 level, basically 437.06, and that 440.1. Above 440.1 on SPY, we're looking bullish. Beneath that 437.06 level, we're looking bearish, right? Headed into next week. And if we fire that bear flag, then puts look great to swing. And let's see. Other than that, guys, have a great Friday. Have a great, safe weekend. I'll see you back here on Monday for our next pre-market prep session. Peace out, everybody.